In this video, we will explore the rise and fall of FTX, a cryptocurrency exchange founded by Sam Bankman-Fried, a billionaire entrepreneur who started his career as a trader at Jane Street Capital. Although this is a true crime channel, I usually don't cover financial crime, but the more I read about the FTX scandal, the more fascinated I became, and I thought that you might find it interesting too. If you don't know anything about cryptocurrencies or finance, don't worry about it, because I will explain everything as we go along. We will go over Sam's journey to success, which began with his interest in effective altruism, which led him to work at the Center for Effective Altruism in Berkeley and ultimately co-found Alameda Research, a cryptocurrency trading firm. In 2019, Sam and his colleagues founded FTX, which quickly became a successful cryptocurrency exchange, attracting investors like Binance and Sequoia Capital. However, FTX's success was short-lived as the company faced several scandals. We will explore the events that led to FTX's collapse, the involvement of Sam and his colleagues in fraudulent activities, and the aftermath of the scandal. Sam Bankman-Fried was born on March 6, 1992, on the campus of Stanford University to Joseph Bankman and Barbara Fried. Sam's parents are both highly respected professors at Stanford Law School. Joseph Bankman is a tax law scholar who became a licensed clinical psychologist and promoted cognitive behavioral therapy, while Barbara Fried is an award-winning teacher who specializes in moral philosophy and the law. Former students describe them as caring deeply about students and supportive. Bankman is a staunch believer in utilitarianism and passed this belief on to his son, who became a major proponent of the effective altruism movement. In a book dedication, Barbara Fried writes that Sam had shown her by example the nobility of the ethical principle at the heart of utilitarianism. Sam grew up in a historic 3,000-square-foot house located on almost an acre of land in Stanford's campus, according to federal filings. The home size is considered large for Palo Alto, where the average home size is 1,900 square feet, but the sales price is $3 million. The neighborhood also includes Stanford co-ops with unique names and fraternities like Kappa Sigma. Palo Alto is known for its wealth and high levels of education, with almost 80% of residents over 25 having a bachelor's degree and 50% having an advanced degree, making it one of the most educated cities in California. Sam did not attend the top-ranked public schools in Palo Alto, despite their reputation. Instead, he went to the private school Crystal Springs Uplands in the wealthy Bay Area suburb of Hillsborough, where tuition now costs over $56,000 annually. While attending the school, Sam won physics awards, but spent most of his free time playing computer games like StarCraft and League of Legends, as well as the trading card game Magic the Gathering, according to a now-deleted profile on an investor website. During his time at school, over the summers, Sam would attend Canada-USA Math Camp, a prestigious summer program for mathematically talented high school students. It would be at the math camp where Sam would meet two people who would become pivotal to the founding of FTX years later. Gary Wang was born in China and moved to Minnesota with his family when he was 8. He spent 4 years in the University of Minnesota's Talented Youth in Mathematics program and had a strong interest in math and coding from a young age. He later moved to Cherry Hill, New Jersey, where he joined the school's math, chess, and chemistry clubs and competed with the Science Olympiad team. Wang met Sam Bankman-Fried in 2008 at Canada-USA Math Camp. Sam Trabucco grew up in Natick, attended Roxbury Latin School, and was one of those math kids who enjoyed puzzles. The son of a Wellesley College campus police officer and a preschool teacher, Trabucco did not come from the privileged background as some of the other people in this story. Trabucco participated in math competitions and attended the math camp, where he met Gary Wang and Sam Bankman-Fried in 2010. For the rest of the video, I would be referring to Sam Trabucco as Trabucco to avoid confusing him with Sam Bankman-Fried. Sam, Trabucco, and Gary attended MIT. Sam was a year ahead of Trabucco and Gary. All three of them lived in a group house known as Epsilon Theta. Sam majored in physics and found college life boring, except for social development. As a sophomore, Sam became interested in effective altruism, a movement that aims to use evidence and reason to figure out how to benefit others as much as possible. He had lunch with one of the founders, Will MacAskill, to learn more about it. Sam then considered earning to give, where he would pursue a lucrative career and donate a significant portion of his earnings to charity. During his junior year in college, Sam was torn between working for the Center for Effective Altruism or finding a job on Wall Street to pursue the earning to give route. He felt a nudge towards the latter and interned at Jane Street Capital that summer, discovering his love for trading. He would join Jane Street full-time after graduating from MIT in 2014. Jane Street, a quantitative firm on Wall Street, was known to attract those interested in effective altruism due to its reputation for recruiting from top colleges, offering high salaries, and projecting an anti-Wall Street culture. The firm was founded in 2000 by former traders at Susquehanna Investment Group and differentiated itself by using its own proprietary assets to trade. It built its business around arbitrage, a trading strategy that exploits tiny price differences between similar investments. The company's success enabled it to become one of the largest trading firms globally, with over 2,000 employees. Jane Street sought to hire graduates who could be easily trained to use their systems, like mathematicians or computer scientists, regardless of whether they had prior knowledge of finance or economics. The company's focus on risk management became a core part of its identity. The firm became informally associated with the effective altruism movement. Many of the people who worked at Jane Street were involved in philanthropic giving, with some donating to causes associated with effective altruism. The company projected an anti-Wall Street bent and promoted a flat hierarchy with little turnover. Will MacAskill, in an interview with the New York Times in April 2022, would say that effective altruists typically would not thrive in investment banking, but Jane Street's nerdy, intellectual culture made it a better fit. At Jane Street, Sam built connections with colleagues who shared his views. Brett Harrison, whom Sam recruited to run FTX's U.S. operations in 2021, bonded with him over their commitment to animal rights. Other former Jane Street employees, including Xiaoyun Zhang and Duncan Reingens Yu, also founded Modulo Capital, a hedge fund that would be backed by FTX. Of course, the most important person that Sam would meet at Jane Street, at least when it came to FTX, was Caroline Ellison. Caroline, the eldest of three daughters of MIT economics professors Glenn and Sarah Fisher Ellison, grew up in Massachusetts. She was exposed to economics early, learning Bayesian statistics in primary school, and gifted her father an economic study of stuffed animal prices for his birthday when she was 8. In high school, she was captain of her math team and represented Newton several times in the Math Prize for Girls. She was accepted into the MIT Prime's after-school program during her senior year and graduated with a National Merit Scholarship. Ellison graduated from Stanford University and joined Jane Street full-time as an equities trader, where she had began her career in quantitative trading with 2 internships. As part of her recruitment process, she was part of a cohort of fresh graduates mentored by Sam, and the two connected over their shared belief in effective altruism. Sam left Jane Street in 2017 to work on his own ideas. He worked briefly as the director for the Center for Effective Altruism in Berkeley, California. During his time in Berkeley, he used the arbitrage strategies he had learned at Jane Street to trade Bitcoin. I don't want this to be a video about cryptocurrencies, but I think we can use a short overview before continuing on. Cryptocurrency is a digital or virtual currency that uses cryptography for security and operates independently of a central bank. It uses decentralized technology called blockchain, which records and verifies transactions. Cryptocurrency is stored in a digital wallet and can be used to buy goods and services or traded on an exchange. The value of cryptocurrencies can be highly volatile, which for traders like Sam meant that they both had high risk and the potential for astronomical returns. Lastly, cryptocurrencies have very little government regulation, which also made it an attractive investment for Sam. While working at the Center for Effective Altruism, Sam met Tara Mac Aulay, who was the CEO of the center in Berkeley. Tara grew up in Australia and finished high school by the age of 16 and attended Monash University, where she studied pharmaceutical science. She worked at a hospital in Melbourne for a few years before volunteering for the Red Cross in Bhutan and eventually joined the center in 2015. Sam and Tara co-founded Alameda Research, a cryptocurrency trading firm, in November 2017. In 2017, Bitcoin was very expensive in Japan compared to the US, and Alameda Research was founded to take advantage of this. Sam could easily buy Bitcoin abroad and find a high-priced buyer with Japanese yen, but the hard part was setting up infrastructure to exploit Japan's expensive Bitcoin. Depositing yen into a Japanese bank account and getting it out of the country proved challenging. Sam was frustrated with regional Japanese banks not opening accounts for his crypto-focused businesses. He chose a name that would fool them, as banks hesitated to serve crypto companies but welcomed a research institute. The specifics of how much money Sam made aren't available, but he has admitted to moving up to $25 million worth of Bitcoin and yen per day. In February 2018, during a trip to San Francisco, Caroline Ellison met Sam, who had just started Alameda Research. During their meeting, Caroline was dressed as a sultry wood nymph for a live-action role-playing event that she was going to. Sam and Caroline had coffee and discussed his plans for the new project, which he had initially kept secret. Caroline was intrigued and found the idea of crypto trading exciting. Caroline would leave Jane Street and join Alameda a few weeks later. At the time of her joining, she had more experience than most of the other traders. In April 2018, some of the early Alameda employees, including co-founder Tara Mac Aulay, would leave the firm amid a fallout with Sam on risk and compliance issues. In December 2022, the employees claimed that Bankman-Fried took a cavalier approach to risk and paid little attention to the firm's commingled trading capital and operating cash, leaving profits and losses unclear. In late 2018, Sam attended a 3-day cryptocurrency conference in Macau, which led to him moving Alameda's headquarters to Hong Kong, which had a friendlier regulatory environment for cryptocurrency companies. However, things at Alameda were not going well. The gap in Bitcoin prices of Japan and the US had closed, and Alameda had made big bets with borrowed cash and crypto, resulting in both wins and losses. In 2020, Citigroup explored partnerships with Alameda and others for a crypto lending business. However, the bank's co-head of digital assets rates trading, Austin Campbell, became skeptical of Alameda due to their inability to articulate a risk management framework. In March 2019, Trabuco, who had been working for Susquehanna International Group after graduating from MIT, joined Alameda as a trader. Sam had also been in touch with Gary Wang, who was working as a software engineer at Google at the time. Together, Sam and Gary would start FTX in May 2019. FTX was a cryptocurrency exchange and was short for Futures Exchange. A cryptocurrency exchange is a business that allows customers to trade cryptocurrencies or digital currencies for other assets, such as other digital currencies or conventional currencies, such as euros or dollars. It's probably best to think of it as a stock exchange, where instead of stocks of companies, cryptocurrencies are traded, and just like there are many stock exchanges like the New York Stock Exchange and the Toronto Stock Exchange, there are many cryptocurrency exchanges too, like FTX and Binance, who we will learn more about shortly. While researching this video, I have read a lot about Sam, including several interviews with him and many documentaries on him. However, something that still remains unclear is when, how, and why he came up with the idea for FTX. When Sam talks about creating FTX, he usually pads his answers with platitudes about effective altruism, but Sam is also a notorious liar, as we all know. So I wouldn't trust him to give us an accurate answer. For now, we can only speculate. There are two answers that stick out the most. The first is that FTX was created to help support Alameda's trading activities. The second is that FTX was a way to capitalize on the inefficient and loosely regulated cryptocurrency market. Regardless of its origins, FTX experienced almost immediate success. Just 6 months after its launch, Changpeng Zhao, the founder of Binance, the world's largest cryptocurrency exchange, purchased a 20% stake in FTX for a whopping $100 million. But that was just the beginning. In the midst of the global pandemic, cryptocurrencies and the companies associated with them were skyrocketing to new heights, and FTX was no exception. In July of 2021, FTX raised an incredible $900 million at a valuation of $18 billion, attracting investment from heavy hitters like Sequoia Capital. In a now-deleted article, Sequoia Capital described their meeting with Sam, where he pitched FTX as a super app where users could do anything with their money, from buying and trading cryptocurrencies to even purchasing a banana. The venture capitalists were blown away by Sam's vision. Little did they know he was playing League of Legends, a video game, during the entire pitch. Now a billionaire, Sam repurchased the 20% stake that he had sold to Zhao of Binance for $2 billion. Remember, Zhao had purchased the stake for $100 million and had received an annualized return of almost 500% in less than 2 years. In September 2021, Sam moved the headquarters of FTX from Hong Kong to the Bahamas due to the strict COVID regulations in Hong Kong. This is the period where Sam's story reaches both its public and private peaks. FTX signed sponsorship deals with several celebrities and organizations to promote their business. FTX had signed deals with the Mercedes-AMG Petronas Formula One racing team, the NBA's Miami Heat, Brazilian esports team Furia, the NBA's Golden State Warriors, esports club team Solomid, the University of California, Berkeley, and Major League Baseball to put a logo patch on the uniforms of league umpires. FTX had also created a series of commercials featuring stars such as Larry David, Tom Brady, Shaquille O'Neal, Steph Curry, and Naomi Osaka. Privately, Sam and his friends lived together in a $40 million mansion at the Albany Resort in the Bahamas, where they allegedly engaged in a lifestyle fueled by drugs, open sexuality, and vegetarian food. They reportedly stayed up all night, snorted Adderall, and dressed casually, in contrast to the traditional dress code of the wealthy residents of the resort. The group reportedly used amphetamines to stay awake and sleeping pills to fall asleep. Their penthouse at the resort was seen as their nerve center and was where they conducted important business meetings, despite their boss allegedly spending time playing video games. A report by CoinDesk suggested that the 10 roommates in the house were all involved in polyamorous relationships with each other, and Caroline Ellison had specific ideas about how free love should work. She had written on her Tumblr about her polyamorous relationships and her desire to be part of an imperial Chinese harem. She believed that everyone should have a ranking of their partners and that there should be vicious power struggles for the higher ranks. In one post, she wrote that cute boyfriends included those who controlled major world governments and had sufficient strength to physically overpower their partners. Ellison also joked about how growing up in the 21st century was not a good time for sex, expressing dissatisfaction with men's superficial concerns for physical attractiveness and sweet personalities. She wrote that she had noticed a change in her desires and was less aesthetically attracted to femininity and more attracted to masculinity. She also expressed a new liking for masochism and doing things that were hard, unpleasant, physically taxing, or emotionally painful. Publicly, Sam's image was being managed carefully by his investors. He was featured on the cover of several high-profile magazines such as Forbes and Fortune, who called Sam the next Warren Buffett. Several prominent YouTubers like Nas Daily and Graham Stephan featured Sam on their channels and built up his image as a philanthropic billionaire. All along, Sam used the philosophies of effective altruism to sell himself as a benevolent business magnate to the public. In December 2021, Sam testified before the Committee on Financial Services about regulating the cryptocurrency industry. This would later come back to haunt him because it was the start of tensions between Sam and Changpeng Zhao of Binance, who was against any regulation of cryptocurrencies. During the 2022 midterm elections, Sam was the second-largest individual donor to Democratic causes, with total donations of nearly $40 million, primarily given to the Protect Our Future PAC. While Sam claimed his political contributions were not aimed at influencing policy goals, FTX was circulating a list of suggestions to policymakers at the time. He advocated for regulation through the proposed Digital Commodities Consumer Protection Act by lobbying Congress, which was perceived as being favorable to FTX but harmful to the broader industry, especially decentralized finance competitors. In May 2022, he announced his plans to spend north of $100 million in the 2024 presidential election, which he later walked back. Although publicly he gave Republicans only $235,000, Sam would later say that he gave Republicans a similar amount as Democrats, but he did so through anonymous super PACs, which don't need to disclose the identity of donors. According to Sam, he did so because the media gave unfavorable coverage to Republican donors. In October 2021, things started to change. The rise in cryptocurrency prices that had fueled FTX's growth was coming to an end. That same month, FTX had raised $420 million, mainly from Sequoia Capital, which valued the company at $25 billion. Sam, who had been the CEO of both FTX and Alameda Research up until then, stepped back from his role at Alameda, and Trabucco and Caroline Ellison became co-CEOs of the company. Caroline had also been the on-again, off-again girlfriend of Sam at this time. The cryptocurrency crash in November 2021 only served to enhance Sam's image further. While other companies in the crypto space were going bankrupt, Sam, who had raised funding just before the crash, was loaded with money. Sam gave credit lines to several embattled companies and even acquired a few struggling organizations such as BlockFi, a cryptocurrency lender which FTX bought for $240 million. This led to Jim Cramer of Mad Money calling Sam the new J.P. Morgan. However, the end was very near. In August 2022, Trabucco stepped down from his position as co-CEO of Alameda Research and left the company. Before his departure, though, Trabucco went on a multi-million-dollar property buying spree, which included a 52-foot yacht. Trabucco hasn't yet given a clear reason for his departure, and his current whereabouts are unknown. However, it is important to mention that Trabucco has not been charged with any wrongdoing by the authorities yet. In September 2022, Bloomberg reported on the relationship between Alameda Research and FTX. Alameda had functioned as a market maker for FTX early on. A market maker is an entity that provides liquidity to a market by buying and selling assets. It still remained the largest depositor of stablecoins on FTX in June and July 2022. A stablecoin is a cryptocurrency that is pegged to an asset such as the US dollar. This relationship could have been prohibited by regulatory oversight that applies to traditional equities markets. Alameda's trading on FTX meant that they could potentially gain financially when others lost money on the exchange. It was also revealed that Alameda Research amassed specific crypto tokens just before FTX would announce their decision to list them for trading between early 2021 and March 2022. Once the coins were listed and the price went up, Alameda would sell their coins and accrue very large profits. In May and June 2022, Alameda Research suffered losses, which led to FTX lending them more than half of its customer funds, a decision that was a poor judgment call, according to Sam. Anonymous sources reported that Alameda CEO Caroline Ellison, Sam Bankman-Freed, Gary Wang, and Director of Engineering Nishad Singh knew about the decision. FTX used software to conceal the misuse of customer funds. Before we move forward, I want to ask you a question. What, according to you, is money? You can pause the video and think about that for a few seconds. In the simplest terms, money is what we use to buy things and services. But have you ever wondered why it works like that? Well, let's take a closer look. Take out a dollar bill or any currency you have and examine it. You'll notice a few signatures on it and the term legal tender. Essentially, this bill is a contract between the buyer and seller, enforced by the government or central bank of your country. But have you ever considered that we don't really need the government to make a transaction happen? For example, If I bake a cake and you write a poem and we agree to exchange them, we don't need any authority to make it happen. That's the underlying philosophy of cryptocurrencies, stripped of all the buzzwords and tech jargon. So, if you wanted to pay me in Bitcoin for that cake, we just need to agree to that exchange. Now, here's an interesting question for you. What if you could create as much Bitcoin as you needed out of thin air? Think about it. When Sam had founded FTX in May 2019, he had also created the FTX token, popularly known by its trading symbol, FTT. The goal of the token was to give FTT holders discounts on trading fees and other benefits on FTX. It is important to note that FTT was not an investment and did not provide ownership over the FTX platform. Instead, it was a utility token meant to be used to reward loyal users and save on trading costs. However, the value of FTT was directly linked to FTX. The more users traded on FTX, the higher the price of FTT would go. So, in a sense, FTT worked as a type of pseudo-equity in FTX. By early September 2021, the price of FTT had gone up to $84. However, in November 2022, FTT had fallen to $25. At the time of writing the script for this video, FTT was trading at $1.60, down about 98% from its peak. CoinDesk reported on November 5th that Alameda Research held a significant amount of FTT tokens, making up a substantial portion of their assets. The report stated that Alameda's balance sheet held $6 billion in FTT. In 2021, when Sam had bought back the stake he had sold to Binance for $2 billion, he had done so by paying part of the $2 billion in FTT tokens. By early November 2022, Binance had 23 million FTT tokens, worth about $529 million. On November 7, 2022, Binance announced their intention to sell its holdings in FTT, citing recent revelations. The sale of Binance's holdings, along with low FTT trading volume and tensions between Zhao and Sam, led to a sharp drop in FTT's price. Bloomberg and TechCrunch reported that any sale by Binance would have a large impact on FTT's price. Binance's announcement resulted in $6 billion of customer withdrawals from FTX, which struggled to keep up with the demand. To ensure customer asset recovery, Binance entered into a non-binding agreement to purchase FTX, excluding FTX US, which was a separate exchange for U.S. residents also created by Sam. On the day of the announcement, FTT lost 80% of its value. On November 9th, Bloomberg reported that the acquisition of FTX by Binance was unlikely due to the poor state of FTX's finances. The United States Securities and Exchange Commission and Commodity Futures Trading Commission were investigating FTX's connections to Sam's other holdings and its handling of client funds. Later that day, Binance announced that it would not move forward with the deal due to FTX's reported mishandling of customer funds and pending investigations. FTX's website also stated that it was not processing withdrawals at that time, and Sam stated that the firm would need funds from outside to meet demand for withdrawals due to a lack of liquidity. FTX US, however, as a separate company, was not currently impacted by the crisis. On November 10th, Axios reported that FTX approached Kraken, another cryptocurrency exchange, for a potential rescue deal. Sam made several statements taking responsibility for FTX's failure and indicating that FTX was attempting to raise $10 billion in emergency financing to remain solvent. Alameda Research would cease trading and end operations. FTX's in-house legal and compliance teams had resigned by this point, and anonymous sources cited by the Wall Street Journal said that Alameda Research owed FTX some $10 billion. Disagreements emerged between remaining executives, with Sam resisting urges from the other executives to end trading on the exchanges. The executives asked Sam to concede control of FTX US to them, which he resisted. On November 11th, Sam announced that he had filed FTX US for bankruptcy, along with FTX and Alameda. Sam continued to seek capital for FTX after the bankruptcy, and claimed without evidence that a potential backer had emerged soon after the filing. On November 12th, anonymous sources cited by the Wall Street Journal said that Alameda CEO Caroline Ellison disclosed to other Alameda employees that she, Sam Bankman-Freed, Gary Wang, and FTX engineering director Nishad Singh knew that client deposits were transferred from FTX to Alameda and that the funds were used in part to pay back loans Alameda had taken to make investments. The Securities Commission of the Bahamas froze the assets of one of FTX's subsidiaries, FTX Digital Markets Limited, and related parties, and provisionally appointed an attorney as liquidator. Japan's Financial Services Agency ordered FTX Japan to suspend some operations, and the company's Australian subsidiary was placed under administration. On the same day, the team running the FTX Future Fund, a charitable group bankrolled by Bankman-Freed, announced their collective resignations. On November 11th, cryptocurrency exchange FTX and its affiliated companies, including FTX US and Alameda Research, filed for bankruptcy in Delaware. Anonymous sources claimed that FTX owed up to $8 billion. BlockFi, which was affiliated with FTX, suspended operations due to FTX's collapse. Sam resigned from his position as FTX CEO and was replaced by John J. Ray III, a corporate restructuring specialist who had previously overseen the liquidation of Enron. FTX employees began leaving for Hong Kong, the location of the company's former headquarters, or other locations, while Sam remained in the Bahamas, where he was questioned by authorities, including the Royal Bahamas Police Force. Late on November 11th, approximately $473 million in funds were removed from FTX through unauthorized transactions. FTX and FTX US intended to move remaining funds denominated in cryptocurrency to offline cold storage. The stolen funds were mostly stablecoins such as Tether and were quickly exchanged for Ethereum. A person speaking on behalf of FTX in a Telegram chat referred to the unauthorized transactions as a hack and encouraged users to delete FTX mobile apps as they were compromised. Kraken later announced its assistance in identifying the perpetrator, and on November 14th, Kraken's chief security officer said on Twitter that the firm knew the identity of a user who paid transaction fees associated with moving the stolen money through their Kraken account. Between $1 billion and $2 billion in customer funds reportedly could not be accounted for as of November 12th. FTX's balance sheet shortly before the bankruptcy showed $9 billion in liabilities against $900 million in liquid assets, $5 billion in less liquid assets, and $3.2 billion in illiquid private equity investments, according to the Financial Times. Among FTX's less liquid assets were two tokens that it had just made up, referring to the FTX token and Serum, a separate cryptocurrency accounted for in the balance sheet. In an interview with Vox, Sam blamed malware on a device owned by an ex-employee for the theft. In November 2022, the Royal Bahamas Police Force launched a criminal investigation into FTX's collapse, and the U.S. Attorney for the Southern District of New York began an investigation. The U.S. House Committee on Financial Services announced plans for hearings on the matter in December and intends to seek testimony from Sam. A class action lawsuit was filed in Miami against Sam and several celebrities alleging that FTX engaged in deceptive practices. In December, former CEO of Alameda, Caroline Ellison, and former CTO of FTX, Gary Wang, pleaded guilty to fraud and other charges and agreed to cooperate with federal investigators in the criminal case against Sam Bankman-Freed. After FTX went bankrupt in November, Sam embarked on what can be called an apology tour, where he went on TV shows, radio shows, podcasts, and even Twitter Spaces. During these interactions, he laid the blame for FTX's collapse on Caroline Ellison. During the tour, when asked about his previous statements on effective altruism, Sam would disown his earlier views and say that, quote, dumb game we woke Westerners play where we say all the right shibboleths and so everyone likes us. However, in early December 2023, CoffeeZilla, a YouTuber, interviewed Sam just weeks before he was arrested for fraud. In the interviews, CoffeeZilla questioned Sam's knowledge of FTX's funds being wired to Alameda Research, his competence as a leader, and eventually got him to admit that customer deposits were treated differently than outlined in the terms of service. The admission was deemed as an admission of fraud and spread online. CoffeeZilla had first covered Sam in April 2022, when he had published a video in which he drew attention to Sam's controversial remarks about crypto staking. During his interview with Bloomberg financial columnist Matt Levine and the Odd Lots podcast, Sam accidentally described crypto staking or yield farming as a Ponzi scheme. After the FTX scandal unfolded, CoffeeZilla commented that his old video has aged like a fine wine. On December 12, 2022, Sam was arrested in the Bahamas on charges of wire fraud conspiracy, securities fraud conspiracy, and money laundering, and faced extradition to the U.S. The Bahamas Prime Minister stated that both countries were investigating the collapse of FTX. Sam faced a maximum of 115 years in prison if convicted. After 10 days in prison, he consented to extradition and is currently free on a $250 million bond with the condition that he resides at his parents' home in California. On January 3, 2023, Sam pled not guilty to the charges. On February 1, 2023, the judge presiding over his case tightened his bail conditions, forbidding him from contacting current or former employees of FTX without attorneys present. An additional 4 criminal charges were announced on February 23, 2023, primarily focused on his making of more than 300 illegal political donations. The charges were expected to add further complications to his legal case, which is scheduled to go to trial in October 2023. Did you or someone you know lose their money in FTX? What did you think of CoffeeZilla's coverage of Sam? And what do you think should happen to Sam and the others involved in FTX? Let me know in the comments. I would love to hear what you have to say. Also, consider giving this video a like if you liked it. That really helps with the algorithm. Additionally, consider subscribing to the channel for more true crime. Till next time, signing off. This has been Christina.